The first 10 trading days of September has just been ugly for the Nasdaq. That we haven't had to say that in a long time. Should you be worried? I'm going to tell you coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Cohorn Financial Group. Welcome to the Wise Money channel. Be sure to hit that subscribe button, turn on notifications, and smash that thumbs up button. My goodness, after an amazing rally since March, we've had an ugly September in the Nasdaq. If you look at this chart, that is straight from Yahoo Finance. That is the real deal, folks. The first few trading days of September took the Nasdaq from above 12,000 down below 11,000. What does that mean? It's triggered correction status. Now, as we start this week, it seems to be bouncing off of that. But you know, a couple geeky terms with definitions tied to them. Correction is a drop of 10% off of an all-time high. All right. And a bear market is a drop of 20% off of an all-time high. So we just barely slipped into correction status last Friday in the Nasdaq. Should we be worried? Should we be worried? I mean, the fact that it just took a few trading days for the Nasdaq to go down over 10%, and it did so in alarming fashion, sort of panic wave type selling, should you be worried? Have we seen enough of this tech growth surge? Is it done? Well, let me give you a couple anecdotal ideas and then share three perspectives. The first anecdotal idea is I tell you every time we talk about investing that you need to have an investment philosophy, an investment strategy that is connected to your overall financial plan. So number one, your investments shouldn't be disconnected from the rest of your financial life. They need to be in sync. If you're gambling with investments, but you need your investments to do X in order to reach your goals, you have things disjointed. So your investment strategy needs to be connected with your long-term financial plan. That's why you're investing. So what's the purpose? What do you need your investments to do for you? And get a sound strategy to help you get from where you are to where you need to go. But then second, your overall investment approach needs to have some diversification in it. No one knows what's going to happen tomorrow. There is no investment philosophy out there that can see consistently around the corner. There just isn't. So for our clients that we serve here, we've got an index sort of stable approach, and then we've got a momentum strategy that we complement with it. Well, at one point, right at the end of August, our momentum strategy, as I've told you, it was fully in. It got completely out in before March, and then got back in quickly in April, and then has really been all tech and all growth. At one point, at the end of August, one of the funds that we were using in this momentum strategy was up over 90% year to date, just in 1 year, just in 8 months. And that is in a recession, in a pandemic, and when the government is trying to throw all sorts of aid and stimulus into the economy, a fund that we're using up 90%, that's unbelievable. So there's a little bit of perspective for you. Now, should you be worried? Should we be worried about what's happened with Nasdaq, and should we brace ourselves for a further drop that we move from correction to bear market in Nasdaq? Number one, I would tell you very swift pullbacks often follow very quick surges. And that same chart that I'm talking about of this fund that was up 90% through the end of August, the chart, obviously way down in the spring, and then has been up, and then like this. And then guys, at the end of that chart, before this little correction here, it was as vertical as an investment I've ever seen. And I've been doing this 2 decades. I've never seen an investment go absolutely vertical, and this fund and these tech funds, these growth funds have. So to see a very swift drop right after a surge, that is normal. That is normal behavior. Second is I would tell you corrections are also a normal part of being an investor. And being a great investor doesn't mean that you've got to capture all of the upside and avoid these little corrections. That's not possible. That's not possible. Even with a momentum strategy like we have here, one that is rotating and trying to transition to what's in favor now, and then looks to move to, when that starts moving out of favor, into something else that's gaining momentum, gaining favor. So even though we're doing that, I would tell you, you can't capture the upside without exposing yourself to some of these corrections. And so corrections are fairly normal. In fact, they happen just about once a year. If you look at the overall S&P 500, on any given year, the average drawdown is over 11%. In any given year. So in any given year, you should expect to have your investments drop at least 11%. So this is completely normal. It drives me nuts when I'm surveying the financial landscape, the financial tabloids, and I see a headline that's getting a lot of attention that says, so-and-so manager, so-and-so expert could see a 5% drop from here. My goodness, that is like, that's like saying it could rain. I mean, of course, yes, we're going to see a 10% pullback all the time. Corrections are extremely normal. They're never fun, especially when they happen in a week like we've seen with the Nasdaq, but they're fairly normal. And the third thing is that I would tell you in regards to this very quick and pretty severe pullback that we've seen in the Nasdaq, and whether you should worry, is in order for this economic expansion and stock market expansion to continue, we're going to need to see some rotation away from technology. The Nasdaq index is primarily growth and tech-based, okay? Primarily. So it's not a perfect reflection of the overall tech sector, but it's pretty close. And we're going to need to see this rally rotate away from just tech into some other areas. We're going to. And I've heard traders, I've heard investors say that the tech trade is the most crowded trade they've ever seen, which means if you've got money to invest and it doesn't make sense to put it into real estate at these prices or bonds at these interest rates, then you're looking to invest in the market. Well, when everything else is sort of treading water and you've got tech surging, then it makes sense to be investing in the tech. So obviously that's drawn a lot of attention, and it's absolutely surged. In order for this market to sustain the rally, we're going to have some other sectors, some other areas picking up some momentum. So in order to rotate away from technology, I would say it's normal to see some selling, some swift selling occur as hopefully some other areas begin to gain momentum. So only time will tell. But should you be worried, should you be concerned about the last 10 days in the Nasdaq? I would tell you at this point, no. At this point, no. Even though I maintain that I'm extremely cautious about the height of this stock market in the face of so much uncertainty. The stock market always has 72 things to be worrying about, but right now the amount of uncertainty, the amount of worry is almost, I would say this is the greatest amount of uncertainty that I've seen the market face at any time in my career. And yet we're at all-time highs, or we're very near all-time highs. So for the stock market to be doing so well in the face of so much uncertainty, I'm quite cautious. But based on what we've seen the last 10 days in the Nasdaq, this isn't a reason to start panicking. It's not a reason to start panicking, not a reason to start selling, Apple stock and some of these great companies, Amazon and some others that have seen their stock price fall over the past 10 days. It's not a reason to start panicking yet. Okay, like I said, a rotation away from just tech being in favor, that's got to happen for this market to have legs. All right, corrections are quite normal. They happen all the time, and especially when you see something go vertical, when you see an investment go nothing but straight up for a while, a quick pullback is just common. You've just got to expect that. So you mix all that together, and I'm going to go back to how should you be investing. You should be investing in a way that is consistent with your overall financial plan. Yeah, but if my returns are great and I avoid the downturns, couldn't I be able to retire earlier or spend more money? Yeah, absolutely. But it needs to be in tandem. Your investments need to be working with the rest of your financial life. They need to be in concert, all right? And then second, You need to have a disciplined investment philosophy. Just being swayed by the wind is not an investment philosophy. So we've got a disciplined approach that is just purely diversification based on index, basically an index type model. And then we complement that with a momentum strategy for our clients, where, hey, if you don't like interest rates in these environments, we've got a momentum strategy based around income and yield that is looking for what areas, where can I still get yield, but also be able to pivot if that starts not working. And then same thing with stocks and growth-oriented investments. What areas are really gaining favor? Is that gold? Is that India? Is that tech? Is that biotech? And then as those rotations start transitioning, as what's currently in favor, as that starts going out of favor and something new is gaining momentum, how do you pivot? We've got strategies like that. So for our clients, and I would argue for you, you need to have a diversified mix where you're using those two strategies in concert. So reach out to your certified financial planner. Make sure you've got the right investment strategy, the right investment approach for you. If you don't have one or would like a second opinion, you can certainly reach out to our team. You can find us online, corehorn.com. That's Corehorn with a K, or wisemoneyshow.com. Or you can give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.